Hi students, welcome to Commerce Solutions. So our accounting series is going on. Today we will discuss journal entry. So journal is the recording section of accounting. The transactions recorded first in journal book. So journal is the primary book of entry. Okay, journal is the primary book of entry, and entry should be made on the chronological order. Entry should be made on the chronological order. So what is chronological order? Chronological order means day by day we have to make our transactions. As and when happening transactions, we have to recording at that time. Okay, or at that date. Okay, for example, if a transactions happen on 1st April, we have to record on the 1st April. If transactions happen on 2nd April, we have to record this transaction in the 2nd April. Likewise, we have to continue our recording process on journal. Another thing in chronology means we cannot delete any entry if we have entered. We have to reverse it. Another thing is we cannot enter any transaction on the back date. Okay, we cannot enter any transaction on back date. So this is the principle of some principles we have to follow at the time of maintaining journal book. Okay, so let's discuss how to make entry on journal. As you know that there are two rules. Based on these two rules, we have to make our journal entry. So one is traditional approach or golden rules. Another is modern approach or American approach. We can say that. So without any rules, can we make journal entry? Yes or no? My answer is yes. We can make journal entry if we have proper debit credit knowledge. So if we have understand the meaning of double entry bookkeeping, the definition of double entry bookkeeping, and we are very much clear with debit and credit, we can record journal entry without golden rules and without traditional approach. So let's discuss how it will be happening. So how to make journal entry without any rules? This is the first attempt. We are going to check can we make journal entry without any rules. So just remember what was the definitions of double entry bookkeeping. Double entry bookkeeping says that each transaction has two aspects. Okay, each transaction has two aspects. One is debit, another should be credit. If one is debit, another aspect is credit. So what is debit? Debit is the receiving aspect of the transactions, and credit is the giving aspect of the transactions. So what is debit? Debit is the receiving aspect of the particular transactions. Credit means the giving aspect of the particular transactions. If you are able to understand this concept, you can record journal without any rule. So how? In journal, we have to do debit and credit. Okay, we have to first identify how many accounts in a transaction, and one account should be debit, another account should be credit. It is a coding process. As accounting is a language, the debit credit is the code of that language. We are doing that. We are trying to translate the line sentences to the journal, that is debit credit coding. Okay, so let's take some example and apply the knowledge of debit and credit and try to make journal entries. For example, business started with cash. Business started with cash rupees 10,000. Okay. Business started with cash rupees 10,000. How to make a journal entry of this transaction? So this is a transaction. This is a transaction. And the definitions of double entry bookkeeping telling that each transaction has two aspects. Okay, each transaction has two aspects. So what is two aspect here? One is cash account, another is capital account. Capital account. So this is account and this is account. We have to debit one account and credit another account. So in this transaction, business receiving cash. In return, business have to pay capital, means pay to the owners at the year end or at the time of closing of business. So it is giving aspect of business. Okay. So what is debit? Debit is the receiving aspect. So we have to debit cash, and credit means giving aspect of business. That is credit. So entry will be cash account debited to capital account. Debit means receiving aspect, cash account is debit. Credit means giving aspect, capital is a giving aspect. We have to pay back the money. Now we are receiving, we have to pay back to the owners. So that's why it is the giving aspect of the business. Capital is the giving aspect of business. That's why it is credit. Okay. So let's take another example. Purchase for rupees 20,000 on cash. So purchase of rupees 20,000 on cash. So first, each transaction has two aspects. Here also there is two aspects. One is cash account, because we purchase in exchange of cash. One account is cash account, another account is purchase account. Purchase account. Okay. So here we are giving cash. Okay. We are acquiring something. We are purchasing something. We are purchasing some raw material or finished goods, whatever may be. We are purchasing something means we are receiving something. In return, we are giving cash. Okay. So cash here is cash. Here cash is giving aspect. So here cash is giving aspects. We are receiving something, that is called purchase. This is called receiving aspect. So what is debit? Debit is the receiving aspect. Debit is the receiving aspect. What is credit? Credit is the giving aspect. The entry will be purchase account debited to cash account. This will be your entry. Okay. Now we are not using traditional approach and we are not using modern approach, because we have very much clear about the concept of debit and credit. If you are able to understand this concept, no need to cram any rules. Okay, you can do that. So take another example. Cash sells rupees 10,000. Okay, cash sales means we are selling something in exchange of cash. We are receiving cash and in the exchange we are selling some goods. Okay, so here also each transaction has two aspects. Here also there is two aspects. Another is one is cash account, another is sales account. Here we are receiving cash and giving something, that is called selling. Okay. receiving aspect. Here cash is receiving aspect, and sales, we are selling something means we are giving something to our consumers. Here giving aspect. Okay. So what is debit? Debit means receiving aspect. So cash account should be debit and sales account should be credit. The entry will be cash account debited to sales account. Okay. So this is not a magic. This is the fundamental principle of accounting. This is the rule of debit and credit. Okay. Many authors does not mention this concept because it is a hidden concept. It is hidden behind the definitions of double entry bookkeeping. Okay. If you are very much clear, you will able to do that and no need to cram any rules. Okay. So this is a way. This is a unique way. You might find first time in this video. If you like it, please subscribe our channel and share it to your friends. Okay. Thank you. In the next video, we'll discuss about golden rule and American rules, whatever available in our books. Okay. Thank you.